In this video, we're going to demonstrate how Forex Source subscribers made money trading a sentiment shift involving the Bank of Canada rate decision this week. Now, the move we're going to be looking at is this one here on the CAD-Swiss pair. So let's break this down and see how we could have predicted and caught this move using our market commentary and analysis. Now, before we begin, don't forget to hit the button to subscribe or follow so that you're always notified every time we release a new video. So firstly, we need to understand the context or the baseline surrounding this pair before the move took place. So for that, we can jump to the Forex Source terminal on the 4th of March, where we can see we released our dominant sentiment theme report for the morning before the actual rate decision, saying that the market was in a cautious risk tone after the G7 finance minister and central bank meeting fell short of the market's expectations to curb the economic fallout from the coronavirus. Now, as a result of the more cautionary risk tone, we also saw strength for the Japanese yen and the Swiss franc in the session due to these safe haven statuses. Now, the underlying market tone was also more negative due to the ongoing concerns about the coronavirus at the time. Now, once the baseline was in place, the next step was to identify the type of breaking news that would generate the biggest market moving shift. So also in the terminal, on the 4th of March, we released our daily risk event outlook report, and in this report we highlighted that the BoC was expected to cut rates by 25 basis points, and we highlighted that a bigger rate cut of more than 25 basis points would have created a dovish shift in the CAD. We also highlighted that we had to pay careful attention to the forward guidance by the BoC. For example, if they said that this cut was a one and done cut, that would have been taken as a less dovish reaction. And if they signaled that more rate cuts was possible and more rate cut was to come, that would have seen a more dovish reaction and seen more downside in the CAD. So now all we needed to do was wait for the actual trigger. In other words, the sentiment shift that we waited for, identified ahead of time, to actually take place. So then also in the terminal on the 4th of March, we can see that we had the BoC meeting where we can see the bank cut rates by 50 basis points against the market's expectations of 25 basis points, which gave us the very first signal to sell the CAD. But we also saw that the bank gave clear indication that they were willing to cut rates even further if the economy requires it. So based on the baseline info provided in the analysis and commentary ahead of time, we knew that a CAD Swiss short was going to be a high conviction trading opportunity with the outcome of the meeting. Now, if we jump to the charts, we can see that we had that initial spike to the downside on the 1 minute time frame and then a pullback as the market was digesting the bigger rate cut as well as the statement. Now, if you jumped in after that first 1 minute candle, you could have rode out that initial 30 pip move to the downside. Now, if we jump to a 5 minute chart of the same move, we can see that even if we weren't quick enough to jump in right after that first 1 minute candle, we knew that we had a risk tone that was continuing to deteriorate even further. And we saw that deterioration continuing on into the next session. So we could have waited for a simple 50% pullback of a Fibonacci retracement and traded the CAD Swiss for a much more significant move to the downside for the next couple of sessions as the bias remained firmly to the downside for the CAD Swiss based on that BoC rate decision as well as the ongoing risk of sentiment that we saw in the market. So if you're interested in learning more about how our commentary and analysis can help you to interpret news and fundamental analysis and turn that into trades like this, click the link below and check out Forex Source. Thank you so much for watching, and please post your questions or comments below this video because we do read all of them and actually base our future videos on what you guys ask for.